Hey, it's your boy Steve Peterson with Infinity Investments. Welcome to our YouTube channel where we talk all things commercial and investment real estate. I'm excited for today's video, and we're going to be talking about our second point in the 1031 success checklist that we have developed to help people navigate through 1031 exchanges more efficiently. And that second point is to define your investment criteria. But I'm real excited today because today is March 31st, 2022. We had our first in-person seminar last night, in person at the office, about 15 people there. The first time in 2 years we did this. Now, I started doing these in 2011 and was pretty much a monthly happening, except for, the holiday months and a couple months in summer, but pretty consistently since 2011. And man, I gotta tell you, it was great to get back in front of the people. Here in the Bay Area, most things are pretty much back open up. I know across the country, a lot of y'all still been doing in-person stuff the whole time. I get it. For us, we have not. And so to get back in person, I just got a certain energy about that. And so I'm excited. And so we were talking about group investing last night. And in today's video, let me get right to it. We're going to be talking about defining your investment criteria. All right, because we have a 9-point 1031 exchange checklist that we developed as a method to say, hey, we're doing all these 1031s. We need to bring some order and structure to eliminate the chaos, because investors don't really make great decisions in a chaotic environment. And so what we're trying to do is bring a disciplined approach to this, okay? And our first point on the 1031 checklist was to have a plan. I know it sounds crazy, it's simple, but a lot of people don't operate with an investment plan. All right, the second thing is to define clearly your criteria, okay? What are you gonna invest in? What types of property that you're gonna invest in? What is your minimum rate of return that you're requiring? And that minimum rate of return can also coincide with your cost of capital, right? You may have an actual cost of capital. You may have an opportunity cost of capital. I'm a CCIM, and so in our CCIM curriculum, we talk about really, kind of the cost of capital being kind of the minimum rate of return that people need to meet, right? If you have a cost of capital, and everyone does have a cost of capital, right? Even if it's your cash, the cost of that capital is what that capital can go out and generate if it was to be invested into an alternative. Right? So if you're a stock market person and hey, I'm good at this, I can go out and make 10% in the stock market all day long, right? Then that's your opportunity cost if you choose to go buy some real estate, right? And that real estate may generate 6 to 8% cash on cash. Thing we love about real estate though, cash on cash or return on investment is one measure of return. But we get things like principal pay down. We get things like a growth of the value of the property. We get tax benefits, right? Depreciation helps out a lot of investors a lot of different times. So there's different elements of return. The bottom line is you need to define what is your minimum. And I think also to look at what is your target. And there's no such thing as like a maximum return, right? You're not gonna say, I'm looking to make 100% return. If a property makes 150, I'm not gonna buy it, right? So it's not like a maximum return. You need to have a minimum though that sets the bar of what are you not gonna go after, and then maybe a target. Say, hey, look, I'm not gonna look at anything if it doesn't generate 5% cash on cash, but we're hoping they make 12 to 15 cash. That 12 to 15% cash on cash flows our boat. That's gonna dictate a lot of things. That's gonna dictate where you invest. That's gonna dictate what type of properties you invest in. I mean, there's the, apartments, hotels, office, that type of thing. But then within each one of those classes of each one of those types of properties, there is classes of properties. There's A class, B class, C class, D class, all of which have different levels of return, right? So you've got to sit down and map out your investment criteria to a T. And just give you an example, I've got a client that reached out to me, very, very, very sophisticated client out of LA, and they're in exchange and they're looking for properties. Now, they are in an exchange, they are in their 45-day period, right? I love how they operate though, because they reached out to me and said, okay, here's our specific criteria. We're looking for something. Please send us deals. I started sending them deals that I thought met the criteria. They told me no on 4 deals, but I love that. Let me tell you why. Because they were succinctly able to tell me specifically why they didn't like the deal. They're able to do that because they have a real specific criteria and they do not go outside of that criteria. Like he said, they're going to pay taxes before they go outside of the criteria. Now that's extreme. But I bet he's going to find the investment property that he likes. I'm hoping I'm going to find it for him. And I can appreciate and respect that because he's dialed in. And I know for me as brokers, and I'm pretty confident about this with the other brokers in the world, is that if we know someone really knows what they want and what they don't want, we can work with them more efficiently and we can get to a closed deal faster and consistently. When I talk to an investor and I said, well, what are you looking for? What's your required return? What's your criteria? They say, I'm just looking for a good deal. I know I'm probably going to waste a lot of time with that person. I'm going to waste a lot of time with that person. If we're talking about, okay, just find me a good deal, right? My follow-up question is, well, what does a good deal look like for you? If they can tell me, well, I'm looking for something with upside. I'm looking for something with 20% cash on cash return. Or, hey, I got to have $1 million net profit after I do my rehab and renovate this apartment building. Whatever your criteria, there's no right or wrong criteria, by the way. It's what you set up. But you got to have that set up, right? That's going to help you make decisions. That's going to help you navigate. It's going to help you not buy the worst property of your life. And it's going to help you to find the property that you want. And it's going to help your brokers and your agents that are working with you to be able to help you in an efficient way. When you don't have that set up, when you don't have that emotion, you are shooting from the hip and you are not going to be as profitable as you can. So clearly define your investment criteria. Click the link below to download our 1031 success checklist to guide you through your 1031 exchange and stay tapped into this content that we're bringing to you every week. If it's helpful, like, subscribe, share it with others, and let's continue to support each other and raise the bar in the world of commercial investment real estate. To the next video, best of success to you in your investing career. Peace.